Hey guys, I wanted to kind of do a quick intro here for today's trading session because although it didn't go as well as I'd like it to on camera, I was still able to recover. And I wanted to share the little bit of that insight as to how I recovered on the day. And I'm going to do that at the end of the session. So I'll throw a timestamp in there if you want to just go to the end and watch the end, because it was a little bit of a longer session today. There were still valuable nuggets to take out of a session like this. I mean, have you ever been caught in a situation where the very first trade that you place, it goes against you and then it's all recovery from there? If you have, post in the comments below if you know how I'm feeling, because I'd love to hear them, love to interact and reply to your guys' comments. So again, not the session that I wanted. It's the session I got. So how do you recover from it?
Take a look. So it looks like all morning long, we've got this kind of run up. It's kind of been going up a little bit. Let's take a look and see what the 5 minutes been doing. So we got this still at big down. Wow. And then looks like it's just been consolidating. Look at that. Isn't that crazy? With a slight move up here. Okay. Well, this is the areas that we're gonna need to watch right here. Comes down to there. And then right here. So these are the areas, which gives us a range. Pretty healthy range. We're probably not going to hit it. So we got 25 pips on this turn. What's our price cycle doing? 6, 10. So it looks like we're probably around 10 to 12 in our price cycles. So that's pretty good. So we're hitting probably the end of this price cycle right here. So I'll probably just throw a sell layer on here for a drag back down to that action point. We get a double price cycle. So today, not necessarily, you want to start light, always start light, not heavy, but not necessarily a reduction in position size, if you will, because we're not dealing with large swings, like 20 pip swings or anything like that. So I'm going to start out trading the normal position size of what I normally trade instead of cutting it in half. And then we'll see if that needs to be switched if we start getting into runs or the market structure changes on us. But if we continue to have this kind of stuff where it's just up and down movement, I'll take it all day long. So I'm just getting into some early layer stacks for the reversal of this price cycle. I'm not anticipating it to continue its downward trend, as this was probably a good bounce point off of this. And so I can see it coming back up, testing this area and testing that, and testing coming up to the top. But we'll get this up and down movement as I build that, instead of just a straight up to the top. So that's my assessment right now. I'm looking for it to bounce off of this to go back up and test the top. Anybody else? What do you guys think? Any other thoughts? I guess I better open up chat. Oh, nobody's chatty. Nobody wants to talk today? Come on, I'm lonely.
Good morning.
Oh, I can always count on the cool. I was just saying I'm lonely in here because nobody wants to talk.
Oh, don't be lonely. Your wife loves you.
She's sleeping.
Lucky.
I can't talk to her. And Jerry says he's been trading on this uptrend all morning long. How you been doing, Jerry? What's all morning long? Because the market just opened a half an hour ago for the U.S.
It has more to do with the AADP non-farm report. It was lower than expected, so it plays against the dollar a little bit. That's why the uptrend.
My chats, I don't ignore my chats, Phoenix. I'm always looking at chats. At least I try. So. See, I called you out on that. I'm saying that they're ignored, and then I read it. See? But sometimes I do ignore chats if I'm trading. I have to focus on trading for sure. But I do try to get back to them and answer them. Okay, so Nick, I only read the negative ones. That's right. Go ahead, say something nice, Nick. I dare you. I won't read it.
Oh, fuck.
All right. So I'm going to come up here, test, just waiting for the price cycle turn. I'll probably look to get into some buys on the turn because it looks like we're about due for or the end of this price cycle. But now my new action point is right here for these layers. And so I might recycle these layers if it ignores this action or if it stalls at that action point. If it ignores it, I'll hold on to it. Yeah, see, Nick, I'm going to ignore that comment because it was positive.
Falsified.
You squoze some night pips out, huh? 81? That's pretty good. I couldn't ignore it. How was it last night? All right, here we go. We're up to the top of the action point. Yeah, Nick stole Josh's pips. I saw him do it.
They're crypto pips.
So I think we got a couple price cycles going. So should get a turn here any minute. Ooh. So Monday, I got invited to a jazz game Monday night to one of the suites at the jazz game. Never done that before. It was like suite, or they feed you and all that kind of stuff. And we get hit by a blizzard on Monday. And it literally took me 3 hours to drive 15 miles. And I was still like 3 hours away from the jazz game at the pace of the traffic was going. So I'm like, the game had already started. It's like I wasn't even going to make it. It was just like, so excited to go. And then we get hit by a blizzard and nobody knows how to drive, and the first blizzard of the year. And I was like, okay, So ended up just pulling over and getting dinner and waiting for the storm to ride out and missed the entire game.
Oh, wow.
And I ended up driving for 5 hours to go. If you guys know the area, Cool probably knows this, but I drove from my house to like 106th, and that's as far as I can get in 5 hours.
Wow.
It took me 2 hours to get from work to Cabela's in Lehigh.
Yeah.
It was insane.
Nuts. And people with if you had rear wheel drive, they were just like couldn't go anywhere.
I was sliding with my truck, so
yeah. Well, you got rear wheel drive though, right? Yeah, rear wheel drive.
No, I had all wheel drive on.
All wheel drive on there. Yeah. All right. So we're definitely 2 price cycles now.
Mm-hmm.
So what this move right here says it should come down a price cycle, and this will be our price cycle move. And so this right here is our get out of this trade down here in this area, or this one. So
Dave, other than announcements, the price cycles, the percentage of price cycles, going one, twice, 3 times. I think, again, I forgot the percentage you had it at. A price cycle, one price cycle will hit probably like 70% of the time. I'm just using it 70% of the time, or 80% of the time. 2 price cycle will hit it maybe 60% of the time, and then 3 price cycle, 20 or 30% of the time. Is that kind of?
Generally, I mean, obviously the idea is you see 1 price cycle a lot more than you see 2. You see 2 more than you see 3. And then if you see more than 3, like right now, it's pushing 3.
So is it to go 3 or 4 price cycles or run typically is, I know we can't tell exactly what happened, but announcements is one of the main reasons why it would run that, right?
Yeah. So, good question. So, anytime you get news events, anytime you get a news event, you don't play price cycles. News events and price cycles are like oil and water. They don't go together. Does that make sense? So that's why every morning we look and see what the news is going to give us, because if we're in the news, you have no idea what direction that's going to go, how far it's going to run, what it's going to do, and then that's why FX Streets gives you like red, yellow, and orange news events, because the stronger the news event, the more likely it will ignore price structure. Does that make sense? Okay. And so that's why you got to be cognizant of what those news events are, when they are, maybe not what they are per se, but when they are. And during the time frame that we trade is generally the most news events happen. That makes sense? All right.
Oh, this one's good.
So we got 3 price cycles here. So now we get some profit banked. Now I'm looking for the next. So it came up and hit that red line where I said, okay, you got to watch. And if it crosses this, then we're kind of into like a marching market.
Yeah, I think he's right. At 9, they announced something about the effective funds rate, and that's not on the Forex factory calendar. Kind of a visible event.
Love those.
Yeah. Sometimes they forget, or is it just not too? It's invisible.
It's not like or it's not like an event that happens all the time.
Yeah, I'm not sure. But these last
like a tweet,
and it's a drive based on effective funds rate. If that means anything to you. No,
that's good to know, because then that means that it's not. That means that it's moving up based upon an event, not based upon anything else, which gives you a little bit of, once the event is over, it should try to correct itself or get back into the price structure. And so that tells me that once the dust is settled, we should start getting back to price cycles. If something happens like this, well, in the market where you just get that slow marching market, then, and there's no news event, then that's just market structure being market structure.
Yeah, I agree.
So I'd rather have it. And so that's what I was like, is this going to turn into something like that? But because of that,
it didn't change the rate. That's why.
Right.
I guess they just announced that they didn't change anything. But
when was that? That was 20 minutes ago?
Yeah, 19 minutes ago.
Yeah.
We'll see what it does. But yeah, that's a big run. And I think that little bouncy that's sort of like 2/3 the way down, that's a dead cat bounce.
Yellen's, I certainly plan to remain
You see what I'm saying?
Treasury sector.
Like if you look at the full run, like just below the middle part, there's that boing. That's it. That's an upside down dead cat bounce.
Right there.
Yeah. Below where that blue candle is.
Right.
Yeah.
No, I was going to say, Cool was talking about wicks yesterday. This is where I kind of look at wicks when I'm looking for the bounce. Right up here and this kind of helps me to determine, okay, here's our turn point. Right. But I don't look at something like this, like just a one wick or even this. It's got to be 2, 3 to 4 wicks right here. And then if this builds into one wick and another wick on the bottom and another wick on the bottom, then it's probably going to move higher. So hoping this green guy goes back to blue. Down.
Secretary Yellen, China's zero COVID policy is a threat to supply chain difficulties.
Go down. So gotta get the down arrow.
Stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures.
They're not paying me. Can't have TickStrike. Abs. Just kidding. Okay, it's working. My arrows are working. No. Who's drawing up arrows? Come on. Confess.
The new and improved Todd arrow.
Exactly.
Somebody was buying earlier. They're probably really happy.
Oh, helicopter Ed. He was drawing up arrows. So here though is I only really need, I'd like it to come down, but I'm just looking for a price cycle down. Just one price cycle down will fix a lot of this stuff and then help me get back to take some power back up from the market. And I'm not like, I'm getting close to getting into fix it mode, but I'm not there yet because I feel like this market is definitely due for a little bit of a pullback off of this move. And I'd love to be able to fib this, but if it does bounce up higher, then move this red line right up to there. If it bounces up higher than that, I just don't want to withstand another 30 pip run. And so I'm probably looking to hit that X on this and kind of start over, wait for market structure to come back into this little price cycle does this little price cycle does that kind of a market, and then recoup my losses at that point. I just don't want to get into a ride the wave situation when it's against it. So again, all kind of everything points towards coming back down at least. I'm hoping at least it comes down and tests, kind of establishes this right here, somewhere in here. It'll start helping me to peel off some trades, and then we'll see. And then you can actually, look to fib this move because, thank you, Doug, if it was news, sometimes fib plays really nicely on the backside of a news event or when the dust settles. So I look to do that a lot.
It's also more jobs numbers in half an hour. If those are slightly better, it could come down pretty quick.
U.S. Treasury Secretary Yellen says the U.S.
Hey, I'm looking at you guys' chats now. I like that. Cool. Says that he has some negative pips for you, Josh. That's not nice. Cool.
I got plenty, man. I banked them away just for you, but
hey, if you give me 2 negative, does that make it positive?
You know what? Depends on whose math it is, but I think I learned that in algebra. Yeah.
Okay, so here's that move. Probably going to start just taking off some profit. And so I took 15 pips off, take that guy off. Just kind of, taking off some losses, taking off some wins, probably peel off another loss here and look to get into another profit situation if it bounces back up. Put some more trades on that I can make some money on.
This was the challenge today, huh? Get negative 2% and dig out of it.
Yes. Although when I still have trades on, I don't count it as a negative until I take them. Does that make sense? So when I hit that red X, that's me saying, okay, I'm 2% negative, right? But as long as I see that there's still like opportunity, I won't take them. But these guys, I gotta definitely take. So this layer right here is now in my mind a loss layer, and so I'm looking for opportunities to get out of that and adjust that.
I'm going to be on this for.
I have to admit, I used my profit and closed out of those lower areas because I got nervous with the big upswing.
But why is that a confession? That's a good thing. Oh, you close out for a loss? You took a loss on them?
Yeah, I just closed out of those ones with the wins that we got on the top.
I gotcha. It's not bad. Hey, you know what? Playing it safe. Sometimes, like, there's 2 types of traders out there, and I don't know anybody well enough to pick on this type of trader, but I do know cool. There's the type of that's a cool type of trader, which is
Should we name a strategy after cool?
Never met a trade that you didn't like. And then there's the other type of traders that trade 0.01 on a $50,000 account and they only put 3 trades on because they're scared to make a trade. And don't know if it's scared, but you generally have those extremes, right? Those 2 types of traders and it's kind of funny that Sean and I were just talking about that last night. And because obviously Sean is the master at teaching people or knowing what to do and how to do that. And I was like, we were kind of dissecting a little bit of, you guys are gonna love this, but we were dissecting a little bit of challenges in like what the challenges are today, like out there, not like what we're trying to put together, but challenges from other companies and how we both just hate them. We hate what they are, what they stand for, because there's no teaching element, and you can, from a professional standpoint, you can see right through it that they're really structured to make the trader not succeed and not help them to learn how to trade. In fact, if anything, it's not conducive to a new trader who thinks that they're going to make millions of dollars. And so they sign up for a challenge and they don't get any help, and then they lose, and then they sign back up. And yes, some people do it. Some people do complete the challenge. Some people are successful at it, but the majority of the people are not. And so, and we were looking at like you guys as a whole, who trade the fund, and like, what are the biggest problems that people have? What are the biggest problems that people have across the board? And it's either one of those two things. It's either they get in too heavy too quick, or they don't get in heavy enough and they don't make enough money to move the needle. And so it's a balancing act for sure. And then we're like, well, how do we help the people fix it? And what's that?
Leamington.
Oh, I didn't know if you were talking to that. But and he absolutely loved what we've been doing with the challenges every day, the daily challenges to help you guys get better at different aspects and different things. And a light bulb moment went on for both of us, and we ended up talking from like 1 to like 7 o'clock, and then he calls me again at like 8 once because we had a really awesome light bulb moment that I think you guys are going to love. And it's kind of coincides with the challenge aspect of it, like what we were talking about, like growing your account, but it also coincides with the daily challenges that I've been doing and I've been throwing out to you guys, and trying to get you guys to practice different things. And not going to like go too deep into it and explain it, because we're still kind of ironing out everything. And, but I'll give you guys what the process that we're taking is that issuing a kind of the same type of challenge thing, like that's out there, like with I'm using the word challenge interchangeably here, but I guess the third party challenge, we're calling that, like your FTMO people, those type of challenges. We're trying to come up with something that is a little bit better or different or unique. Obviously, we're going to have a similar product to attract people, but we both feel like that product and we hate that product because it doesn't teach, doesn't learn. You can't learn anything. You don't get taught anything other than the market is the best teacher sometimes, but if you don't know how to recognize and pull the learning points out of the market, then the market can also be the worst teacher because it can teach you bad behavior, bad techniques and all that kind of stuff. So what we come up with is kind of a hybrid of the two. And for those of you guys who do take the challenges, my challenge that I issue you guys on a daily basis, we're thinking about if you pass the challenge, and instead of making it a daily challenge, it's a weekly challenge. So something like, just for an example, and then have different tiers. So the first part of that challenge would be like make 10 pips on one trade, then make 20 pips on one trade, then make 50 pips on one trade, and make 100 pips on one trade. And if you pass for every challenge that you pass, or every tier that you pass, you get actual money put in your funded account and your bank. And so every time you pass a challenge, you get more money to trade with. And so you're building your own bank by learning, and you get more money to trade with every time you pass a challenge. And so we're coming up with that. And then that way we can look at the community as a whole and say, where are people struggling? You know, is it because they go heavy? Well, this week's challenge is to go light every time you place a trade, right? And to only trade with this quantity size and this account size, right? Or this position size for this account. And so we can start changing the challenges up on the fly to help you guys get better. And then as you pass them, you actually profit from passing, right? So that's the concept. And we're really, really liking it, and bringing it out to you guys so that you're actually getting paid to practice at getting better, right? And it's not in a live account. You can do it in a demo account, pass the challenge in a demo account, and increase your piggy bank in the funding account. What do you guys think about that concept? Oh, we got a lot of messages.
I absolutely hate it. I don't like it. I want to lose money.
I know.
I want to lose money.
I know. Cool's like, that means I can't trade my strategy.
What am I going to do? What am I going to do with all these negative pips, man?
Yeah, you cannot trade the H&P strategy.
No, I love it. Love it. Love it.
Yeah, that's basically video game badges.
Exactly, but
those are ridiculously addictive.
Yeah, it is. It is exactly like that, but it actually comes with a monetary reward, right? And I'm not saying that we're not saying that, you know, you're going to increase it by thousands and tens of thousands of dollars, but you can increase it every week, you know? So maybe level one, like make 10 pips on one trade, which is an easy one to pass. Maybe it's like increases your account like $100, and the top one increases like $500 or something like that. We don't know, and we're still ironing out those details, but it's not going to be like just passing the challenges. You're going to grow your funded account faster than if you would trade it. Does that make sense?
Dave, I think that's an awesome idea, because on those, even if you paid somebody with one of those services to pass your challenge, you're eventually going to blow up your account anyway, because you haven't developed any trading skills at all.
Exactly, Jerry. Exactly. That's the one thing we hate about those challenges is like, yes, if you're a good trader, you know how to trade, you can pass those, you're going to be able to pass those challenges, but they're not looking for those people. No, they're not advertising those people, right?
No, their business model is to make money from people resubscribing and resetting their accounts.
Exactly.
Basically paying out the occasional winners from that money.
So it's kind of like in marketing speak, it's giving them what they want but not what they need. And so people are buying what they want, but that's not what they need, because they don't know what they need until they fell. And, you know, I've never done it before, so I don't know any math behind it, but I would imagine that their fell rate, people maybe do it 2, maybe 3 times, and then they're done, right? Like new traders.
Yep. I did a couple of them, and some of them, the way they're set up, not only do you have to reach your percentage goal, but you have to reach it in a certain amount of time. Mm-hmm. So you've got to make like 10% in 30 days. And so if you don't know how to trade, people are just treating it like a lottery ticket. Like they'll go heavy. Right. If they blow up their account, they'll just reset and pay another $500, you know, and
yeah, they're treating it like, you know, hey, if I keep paying $500, eventually I'm going to, you know, how many times before I actually make it back?
Right. Exactly. Yeah.
And it's more like you said, hitting the lottery or winning. It's more like gambling, right? So you're feeding that gambling addiction. Right.
Yep.
And that's what we hate about it. Honestly, that's what I hate about it is that it doesn't teach any good principles. In fact, if anything, it'll eventually give those challenges a bad name, because you're going to eventually get to the point where more people are going to start saying, yeah, I can't. No, those things are just money. They're going to recognize it. The more people that recognize it, the harder it will be for them to get new people eventually. Right. Do you know what I mean?
Yep. Hey, Dave, I've been with Apiary for a long time, but this group is awesome, by the way. So I'm really enjoying it.
Thank you. I appreciate it. Also, for those of you guys who are having issues with Trade on the Streets, I did get a lot of that. I did talk to Sean yesterday about that. They moved databases, or they merged databases. And so if you're having issues getting into your Trader on the Street, it's probably because you've been with Apiary for a long time and you didn't have the correct something or other. So you just have to email support if you haven't already. They'll take care of that, whatever that take care of it is. But usually it affected like people that have been with you for a long time. So, because I had a lot of people hit me up yesterday because I couldn't get into the class. All right. Okay, keep going. Keep going, blue candle. Break it. Break on through to the other side. Yes, my life's a musical. Oh.
May I suggest a challenge?
Yes, you can. What challenges you?
As identify high probability with 3 confluences. Why I determine it's a high probability.
I like that. I think we're going to do that. We're going to go on a hunting challenge. Oh, that is an upside down. That is no place. No. What am I doing there? I like that. I think that's our challenge. Find some high probability trades. This is a level 4 technique in the wobble right here. In case you guys are wondering.
I may be sending you some red markers for Christmas.
This is a level 4 technique, so use it sparingly. Arrows for everybody. That's what it's a Christmas gift. So. I was just reading you guys' comments. Sign up now before the news. Yeah, I was saying, Sean, that hey, maybe you should sign up for one of those challenges and then put them out of business. Sign up for their $1 million challenge. Oh no! Okay, my level. Oh, I'm just gonna go on hit my stop loss. Back. I would fade that candle. I just got nervous. I'm gonna break.
Oh.
Okay, if it pops up here, I'm taking everything off the books. We could just continue to run. I'm hoping it comes all the way back down and flattens and goes the other direction.
Yellen said something, but I'm not sure what. She's talking.
I'm just going to take them. Okay. Now I'm in fix-it mode, Josh, because I took my trades. I don't want it to. I don't want to be in a ride the wave situation here. So we'll see. But I'm also going to sit on my hands for a second because it's news. And
well, Now that you got those trades off for a minute there, I thought you were Oprah with the candles. You get a candle. You get a candle. You get a candle.
Yes, I'm so generous when it comes to handing out arrows and candles. But so now I'm into the challenge that Cliff says. I am looking for high probability trade setups to fix this right here. And there's one of two things. The reason why I took it is because this can only go one of two ways. It can come down to 100% retracement, which is what it's doing, but it flickered and stalled here, and it could have continued that direction. And I didn't want it to continue that direction because when it hit here, I was 4% down, right? And if it continued to cross this and go up, I would have been 5% down, right? And so I took it at 2.8, and I'm now that I can fix this, right? So, and sometimes trading is just like that. You get in, and it immediately goes against you. Other times you get in and it goes in your favor, right? And I love those days when I'm done trading in 10 minutes. But this is because of that move for me. This probably is going to take me, depending on the moves that we get here, but it'll probably take me a couple hours to fix, depending upon the moves that we actually get. All right. So it wants to go up, wants to continue to climb up. So I'm going to look for an opportunity to just get into like a ride the wave situation on a high probability. I'll probably take that right there if it stalls right here. Again, I'm not going to go normal trades, so I'm not going to get into layers, and I'm going to look for high probability trade setups, meaning right this second, if it does cross over here and decide to move higher, take advantage of like a ride the wave type situation. Again, it's popped above this, so we don't have anything really to the left of us that's going to say where's our next support and resistance line. The moment that this trade fails, and then when I'll get out of this trade, and again, not going super heavy, is right here. So this high probability trade setup fails if it crosses this. But if it comes down here and stalls or fails to go 50%, like right there, that's a good indication that it's going to go back the other way. So I'll probably put one on right there. So in fix it mode, when I'm fixing trades, I'm not looking to take 100% of fixing it all in like one or two moves. I compartmentalize and I take that in chunks, right? So I'm looking for just a pop higher here, continuation, and then we'll see if we get that. Because I moved that 50%, it's going to come down and test this red line. And on the action point of this, may buy into that, or may sit on my hands for a second. If it blows past that action point, which it did, kind of, possibly. Rami says the arrow technique doesn't work. Hey, nothing works 100% of the time.
Works half the time.
Yes. What is it? Like 80% of the time it works 60% of the time, or something like. I'm butchering that quote. 100% of the time it works 60% of the time. Somebody knows what I'm talking about, I'm sure. All right, so here we go, coming in here. Hey, I'm glad that people were on the right side of that move for sure. Okay, take this right here. So now I gotta, on this trade, go fill off that top trade unless it gives me the bounce right here. And looking at seeing what is our next possible move. We got a full retracement off of that. We pop up. Now, is it going to continue to go down or is it going to bounce right? That is the question.
Well, that being a tweezer top, wouldn't that be down?
I don't like the way you're talking, Josh.
Well, I'm just thinking, hey, we got out of our sales. It went up. We got into buys. It should go down.
That's how I trade. Some days it's like that, right? And that's kind of my rule of thumb too. Is honestly, if I'm just not calling the market right, and I take a loss followed by another loss, then I'm usually done trading for that time. And then I'll come back in and hit it when the market and I are talking a little bit more. So yeah, I can start seeing this turn in the 5 minute for sure. I can start seeing it to go down. So that you may look for just a pullback, get into some sells, kind of throw a little bit of a hedge on to stop the bleeding. So this guy crosses that, holds. If you hold, this is like a joke. So it says you can convert that saying that 90% is psychological, the other half is technical. So what I'm looking for right this second is if it comes up here, touches this, this is my get out. And if it fails to move higher, then it's going to come back down and retest this And if it comes down and retests that, you could see a break lower. So this is kind of my direction move right here. Like what should you be in, buys or sells? As it comes up and tests this right here. Bank. Go off that guy as well, so it doesn't turn into a bigger loss. Probably just seeing if I can't get a break lower and catch the wave this way. Kind of putting a hedge on a little bit. It would bounce up higher. Great. If not, and kill off the buys. If it crosses this, crosses that area, I'll have to kill those buys. Might not be a bad idea to just sit and wait for the news, see what it does. What do we got here? Come on in 4 minutes. Some pending home sales.
Hey, Dave, I have a question.
Sure.
Do you remember when you did the wobble series videos with Sean?
Yeah. Like where I interviewed him about the wobble.
Yeah. Whatever happened to those videos?
They're on Trader on the streets somewhere.
Are they? Okay.
I know that he did pull them up every wobble boot camp. They force you guys to watch them in the evening.
Oh, okay.
And so people that attended the boot camps, I know that they see them. And I say force, you have to struggle to watch those for sure.
Hey man, I thought they were awesome.
That was me trying
the pleasure of watching them.
That was me back in the very, very early days of figuring out what the heck it is. And I was trying to pull the information out of him because we would do that practice quite a bit. Like when I was trying to, because back then my job was to market, and I was trying to figure out how to market the wobble technique and bottle it up. And so I'm like, hey, and then I'm like, let me put this on camera so that I can go back and watch it. And he's like, hey, let's turn it into a education. I'm like, hey, even better. That's kind of how that evolved. Because I was legit trying to pick his brain to figure out how to teach the wobble technique. And it wasn't even called the wobble technique until we started driving up to that location. I'm like, we got to give it a name. And then he reminded him of the story of him in a canoe. And so if you see the early logos of the wobble technique, you'll see a canoe on it of him trying to get out of a canoe, and he's standing up and fell into the water. And that's why he called it the wobble technique. Oh. Anyways, sorry. That just reminded me of that. Did you have a question on that, Nick?
Yeah. It was an awesome video series, but one of the questions I always had is that last video, he was talking about how a trend broke a trend line, like how the market broke a trend line. And I never understood what the rules were behind that. Like if we had a trend line, what are the rules to kind of trade that, if there's any?
Well, your trend line is like your support and resistance line. It's also an action point, right? And so you definitely want to know where your trend lines are when they break. And so if you look here, like right here, you could say we're definitely kind of in an uptrend, right? Because you got these higher lows, it's an uptrend, and this trend still continues to be up, even if it comes down and decides that this is the turn point right here, right? So once it crosses this is where it crosses that trend. When you say this trend is no more, and it's not traveling. So this is where your action would be. Does that make sense? And so you've got to be cognizant of where your turning point is. And it's usually when it establishes a lower low. And so that news coming in. Let me go off of some of these trades and see on the stalls. Stall. I'm probably going to fade this a little bit. Just look for a little bit of drop there on the fade. And then see if we're going to get a continuation of that down or if it's going to come back up. So we got that news, came in 50%. And now if it pops up, it could pop up and push it higher with this news again. That's typical to what news does. It's a first initial move and then the assessment of that move. And if it was the wrong move, it could push it back higher. Particularly, generally, usually trade that when you do see a 50% retracement off of this breakout candle. And it gets back up there. Generally, that tells you you're more likely to have 100% retracement. But this next candle usually is your information candle. Meaning that if this candle were to break and continue to go this way, that's the direction the news is going to take it. Because of that failed attempt, I think I'm going to look for the 100% retracement off of that. I'm not taking huge amount of trades here. Just because I'm looking for high probability. And if it fails to cross this, like struggling like it is right now, it's not a good sign. It should cross it and trying to get that 100% retracement of that event. Take it. All right, here is where I'm going to go a little bit heavier. See if we can't get a pop up for a short little run to see if I can start fixing some of my trades. And then if it comes down here and establishes another low, I have to get out. So it doesn't pan out, get out.
Both of those little news events were favorable towards the dollar. That's why it's moving.
Thanks. Appreciate that analysis.
It was
Just
like
a reminder,
Holmes
you can
and
trade US PCE price index.
I was talking something about unemployment and then one about homes, but they were both slightly favorable towards the dollar together. So they're both pulling towards the dollar side right now. I'm not sure how far it's going to go.
All right, this is where I'm going to just peel off if it doesn't hold. If it holds in 40 seconds lower, that's when I'll just take those trades off. So it didn't pan out. I kind of did put on a wick. I was looking for it to come up and test that and break that and just pull back in, but nope, didn't do that. So opportunity has escaped. All right, 15 seconds left on this candle. Okay. Yeah, I'm pretty sure now that it's crossed this action point, it's going to come down and test the bottom for sure. So I'm going to put my position. Look for a bounce back up. Just see if I can't get it to come down here, test this, and hopefully break. Yeah. That's, to me, that's called the market wrong twice. And so I'm usually looking to bell right now. Okay. So probably going to do the same thing one last time. See if we can't get it to put a dent. So it pops up, kind of build into a bigger position. It's what I need. Look in this action point for me. I'm going to look at this action point down here, and if it decides to bounce off this action point, get into buys, but hold and see if we're going to get it to run past it. This is going to be fun fixing this. All right. Sorry, not a lot of talking today, more trading, and it's always fun. I love trading, so I'm trying to fix my trades. Thanks, Jerry. I appreciate that comment. It'll be good for us to see you fix it. Painful for you. It's all good. this is where the psychology kind of compounds that psychology factor, I should say. That when you're in a losing situation, do you see the market clearly, or do you get clouded by psychology? And sometimes, a lot of times, you get clouded by psychology because you don't like losing, and losing puts pressure on you, and sometimes you take bad decisions. So that's why getting that reset to zero is very, very powerful by taking the losses, taking them off, and reassessing. If I have losses still on, that affects your judgment as to what direction you should be trading. It affects everything. And so kind of a good rule of thumb is putting your place into a situation where you can reassess the market and think, okay, what is the market doing? And that's kind of what I'm doing right this second is I'm looking to reassess. I'm going to pull this off, look to recycle that layer stack. So this is what I'm looking at right now. I'm just kind of reassessing. You got it coming down to here. It definitely could bounce off of that. You also kind of have this M that's forming. But you could also have a triple bottom too. You don't really know what it's going to do. So is it going to bounce or is it going to continue? If it crosses this right here, it could run for a minute. And let's see. Could run all the way down to here, to this point right there, which gives you another 10 pip run. So getting into sells is not good right now because you're at the end of a price cycle leg. So if it does come up, if it comes up into this range, fells, or even here, this is a good place to put some sells on because you can make another, you can recycle. And even if it doesn't break, comes down here and tests, you're in the profit. The profit right there. Okay, now let's see if we got, this is going to be a bounce point. Now, if it was me, well, it is me. But if I was just normal trading and not looking for high probability trade setups, I would probably be playing a little bit of the bounce on a normal layer stack to come up and just take profit right there. And I held myself from doing that just because, again, it's a normal trade, not a high probability trade to play the bounce. So I'm just hunting for high probability setups right now. Got a couple wicks on the bottom side. It says it could push up, but again, it's only two, so I'm looking for a third or fourth wick on that. And we can get that break right there. I'll be a part of it. I really want to be a part of it. Okay, there's our break. Hopefully it'll give me a little bit of a pullback and I'll jump in. Nope. That's to me, that still gets frustrating to me is when I see it and I see the move, I call the move, I know it's going to happen, and you're not able to take advantage of it. To me, I don't know if that's like more frustrated at myself or more frustrated at the market, because my rule is to not place a sell here, right? It's to wait for a little bit of a pullback. So like right here, but I wanted that pullback to happen right here. And this was just a tiny one. So, and it happened really quickly. I was hoping for it to pull back even more. It didn't happen. Let's see if it breaks lower here. And if you're into sells right here, you definitely now are in a ride the wave situation. And even though I'm on the tail end of, it could be on the tail end of this wave, the same rule applies here, where if it decides to come back, crosses that with the body, I'm going to come back and retest that. So this is a good place to get back in if it fails right here. So it looks like it's going to do.
Dave, I'm riding the wave and I'm up 31 pips on each trade.
Awesome.
Decide when to get out.
So right this second, I mean, you started up here, right? So you get the 31 pips. So right this second, you got to look at this kind of like what we were talking about with Nick. You got a trend line. You got the trend that it's forming or is coming up against, right? So this is a possible bounce point right here. Because of that, I'm probably going to get out. You got a possible bounce point right here. So you could get out right here. But if it wasn't, normal ride the wave strategy says that when you see a turn, so when the market comes up here, since you're so far down, I turn, or when I get an opportunity to ride the wave and I can go to the 5 minute. So you see this 5 minute right here. Since you're up here, I would take this 5 minute chart, and the moment that a green bar crosses this 5 minute, that's when I would get out. But even more important than that is I probably put my stop losses right above here and secure that layer stack. That makes sense. So get into a secured trade, and even if you do get a big old pop this way and it starts to run up, you're at least secured on that profit. And that's how I'd play that for sure.
Thanks.
Yeah. And that was a good call. That was a really good call, Debbie. That's I missed that one. Now it's bucked the trend. So the trend is no longer, it crossed over that trend. It's crossed over everything. It's ran its course. Now you got to say, are we into a marching market? How far is it going to run down? Right? how far is this truly going to run down? And the only thing you can say, look at, is here's a bounce point right here. This is a bounce point right here. And then eventually, like we talked about earlier, this is our major point, but this is also a action point. So those are your action points in the market. So where are those going to turn? And for me, yes, I'd like to trade. If you're going to get into trades right this second, you just don't know how far it's going to run. And so jumping on the back on a run and chasing the market sometimes can be really, really dangerous. Because if you chase the market and then you get on the turn point, right? And it could be a turn point right this second. So it's hard to chase the market. So I'd rather wait until it does decide to turn and then play the fib off of this move and not try to chase this market. Because I don't know. I have no idea at this point in time where or when it's going to turn.
So, Dave, you'd play the fib on the 5-minute chart.
I would, yeah. But I'd wait for confirmation that it is, in fact, turning. Mm-hmm. And usually you'll get that confirmation. So because you're in this, it's established this channel, the confirmation that I would really want is it to cross this right here. Because even if it comes all the way back up to here, it could continue to move down because you're still kind of, it hasn't broken the structure of this channel, even if it moves all the way back to that. So if you think there's still room for it to run down, you could get into it. In fact, if I was you, Debbie, and this is how I would do it, is I'd look for opportunities to build back in and to get in heavier. So this is where I usually gobble up a lot. So I'd set my stop losses on all these right here, right above this. And then right here, I would have gone into another layer, maybe even 2 layers right here, and just started trading this, waiting to see if it broke that. If it doesn't, then still get out with profit and recycle that layer. And then know that I have this in my back pocket. So I have all this right here that I have in my back pocket and it's secured. And then I kind of mentally disregard this trade and I start trading again, like wobbling or whatever the market structure is doing again, and start picking up pips knowing that I have profit in my back pocket. Does that make sense?
Yep.
And so sometimes, and a lot of times, I'm able to ride the wave in multiple positions while having a secured trade on. And I love that, right? And those are the days when I hit those 10, 20% trading days when it gives you that. And this market definitely has given you that. By this little pullback, you could have got back in. This little pullback, you could have built in. And then right now, you can build back in. But at some point, it will stop running and it will come back the other way. And the position I'm in right now is I can't afford to not take high probability trade setups. And when a market just continues to run down in one direction, it doesn't give you a high probability trade setup. See, if it crosses this, it's going to run again. Nothing like watching opportunity, and not being a part of it. I hate that. Yeah, Phoenix, you're probably right. That's honestly, these are the type of markets that if you're a counter trend trader, gets you in trouble for sure.
Let me tell you something. They're actually saying that they can't see any catalyst at all for what's happening here with the dollar. They have no idea what's going on.
They have no idea what's going on.
So it could be like a global event, like a world event, like just something with with the war or something where.
Yeah, like a
random global event that just happens in the world.
Sometimes like natural disasters, earthquakes, things like that.
Active war, natural disasters, something like that. That they don't have access to immediately.
So this is what usually happens when I'm in this type of a move. I sit on my hands and wait until
just wait.
I get confirmation that it does starting to come back the other way. Then I look for high value, and there's been nothing. So Cliff, I would have jumped into your challenge, but everybody would just be looking at this waiting because there is no high probability trade setups. But right here is another bounce point that we're on. Is it going to bounce, or is it going to ignore it and keep going? Got 2 minutes left on the 5-minute candle for the bounce, possible bounce. But just curious, Debbie, did you build back into another position here?
Yeah, I've built into 3 so far.
It's awesome. So what's your return right now? How are you doing?
I'm up 400 pips and 1.5%.
Okay, so you're trading light still, right? Your position size.
Yeah, I kind of always trade light. I'm at 1/4 of what I could trade. I kind of always trade a full lot in positions.
Got it. Just curious, so you're the opposite of cool. What's your logic and thought process behind that? And I'm not saying it's bad. I'm just saying that I found somebody that's the opposite of cool because I know his logic and thought process. I'm just trying to study that.
Well, and I'm also aggressive, but part of it is that I trade stocks and options a lot. And I learned that, making a quarter at a time, but making it every day, having a coach and making it every day is a good thing. So I can make 1.5%, 2.5% in the couple of hours that I've got by simply going light. Why take the risk? So even though I'm aggressive, for example, when I trade stocks, I trade a triple leveraged ETF.
Sure.
Which is pretty aggressive. And I sell puts to enter positions, which is also very aggressive. So my strategy is to get in where I am. And right now I keep adding layers to this thing, and then I'll take off a higher layer. So I'm never really out, but I'm securing the profit as I go. So that's so I took one at 50 pips and got back in again. So I didn't really get out, but I secured the 50%. And so you would have put the stop loss there. I took it and immediately got back in again.
Okay, so you instead of securing your profit, you take it and then get back in.
I take it and immediately get back in. I'm still riding the wave, but I've taken those pips as opposed to waiting it to come back, because my philosophy is if I get immediately back in, I'll be down 2, 3, 4, 5 pips, and I can wobble in and out of that if it turns, as opposed to waiting for it to come back up and hit a stop loss.
Got it. No, that's good. So you manage your risk through position size. Do you ever increase your position size, or is it always the same?
No, I will increase. I don't go over half what they allot me. So right now I could go up to 2.5 full lots on this size account. I've got 2 different size accounts. This one's a $22,000 account.
Mm-hmm.
So I can go up to 5 and I'll go 2.5, but I normally don't go much higher than that.
Got it. So you take the half and then you cut that in half. Is that what you do?
Right. Yeah.
Okay. No, that's good. And it works for you. So where do you, just out of curiosity, Debbie, what do you know do you know at what market structure that is difficult for you to trade, and like when your trades break down because the market does this? Do you know that?
Yeah, I do. And it's what I've been practicing on, and why I'm in a smaller account right now is because I am aggressive, I would normally keep adding to positions. And if it turned on me, I'm still thinking, okay, it's still going to go down, and I wait longer. So my corrective action is doing what I just explained. Take it as
you go.
Right. So right now, every position I add, I'm taking 2 pips on. I'm just churning pips. So every time one comes off, I put it right back on. So I'm still riding the wave.
Sure.
Not doing it with a long position. So
you're not holding, you're jumping off, getting on, right?
Correct. Every time one clears, I stay at 1.0, and every time one clears, if it goes to 0.9, I put one immediately back on. So now if it goes against me, I've got little bitty things to fix, not big things to fix. So right now it just went from 1 to 0.8, and I put 2 back on immediately. And it just went to 0.9. I put 1 back on immediately. So I'm still in the wave.
Yeah.
If it goes against
so when you say immediately, so I'm assuming that you took off your profit here, so you X'd out and then you added.
I no longer have the 0 take profit. I'm in at 2.
Got it.
So I'm taking 2 pips. So I'm at point. So I just got 6 off. So I just put 6 back on.
Do you put 6 back on in irrespective of where it's at? Like you would put 6 cells on right here?
Now, yep, because I'm riding the wave. So I just got those 4 off. I just put 4 more on.
Yeah, it's just
got 2 off. I got 4 off. I got 5 off. So I'm just clicking. So anytime it goes against me, I'm only going to have little bitty positions to correct.
Got it. So because at some point, because doing that, if you're putting cells here, right? So say you take off, you add, at some point this layer will go against you.
Correct. But it'll go against me little. And then I say, okay, now I need to correct those 1.1 positions. So right now I'm at 500 pips and 2%. And they all just went off. So I put them all immediately back on. So it's equivalent, Dave, to riding the wave.
Yeah.
I'm taking incremental sips every time it goes down.
And she read it correctly as a driving trend downwards. I'm wondering, so anyone who's going short right now is just making a mint.
Yeah.
What was it that encouraged you to get in short in the first place, or where was it?
What encouraged me to go short the first place was on the 5-minute chart. You had that, if you go back and you look at that high point,
right here,
they come down 3 bars. From the one right before that.
Yeah.
Where you have the doji, and then it came up above that and immediately started coming down. I took that as the sign that it was going to go short. So that's when I started doing it. So right now I'm in at 10, and my worst one is a -2. So I'm waiting for it to turn. And if it turns, then I'll X out of those.
Well, do you want to share your screen? Show us what you got. I'm curious to know what the doji. I think I see what you mean, but
I don't know how to do that from where I am.
Should be just a button at the bottom that says share screen.
I'm on 2 different computers. I watch
gotcha.
I watch on a Mac and I trade on a PC.
And you're probably on Zoom, not on the computer you're trading on, right?
So I can't share.
Okay, but you say on the 5 you saw a doji?
Yeah, right here. Zoomed in right here. This is what she's talking about right here.
That one. And then the next candle, it started to form. It went up. And I was sitting on the sidelines. It went up. And then when it started to come down aggressively and cleared the bottom of the doji, I got in. And if you go over to the 1 minute chart and find the correlate piece, you can see it on the 1 minute chart clearly.
Gotcha.
Out a little further,
Yeah.
Yeah. You see it. Yeah. So you see the long candle with the big tail. I got in when it cleared the bottom, the one over to the left from the long, that one. I got in when it cleared the bottom of that.
Which one? Sorry.
This one right here.
I don't see where Dave's pointing. Maybe.
I got in when the 1 minute cleared the bottom of 2 candles over. The bottom of what on the big one would have been the doji.
Sure.
So you've got the arrow go one more to the left. When it cleared the bottom of that, I started shorting. And those 10 that I told you I was under by 2 pips, I'm out of all of them right now. And I got to go to the train station. So right now I'm 518 pips and 2%.
That's awesome. Good job, Debbie.
So but to me, Dave, it's the same thing as riding the wave.
Yeah. No, it's your different technique that you utilize that makes sense for you. Right?
Yeah. So
for sure. So for me, I do it a little differently, but for me, I get more aggressive, right? So if I was in your situation, I'd still be holding on to all of those, but I would be heavier in my position size, right? So I'd probably, if I was trading the way that you traded, if I caught the wave where you caught the wave right here, and I was in the cells, I probably would have stacked onto more here, maybe here, definitely here, and then here again. And each one of these, like I'd probably be in, 2 layers here, maybe another 2 layers here. And then I'd like, okay, now that it's crossed this, I'd put my stop loss here, secure it, and I'd be a little bit more aggressive with my next build in. And so I'd probably be like 4 layers here and then another 4 layers here. So I'd probably be almost to maybe a 2 lots right here. And that's how I would trade it with, and then I'd move my stop loss down. I would have moved my stop loss down to right here on everything. So
and that's where I get in trouble. And having watched Sean and watched you, that's how I was trading.
Mm-hmm.
But then when it made the turn, that's where I was getting in trouble.
Yeah, it's because you have to have your stop loss pretty tight. The heavier that you go, the tighter your stop loss needs to be.
So the way I cured it for me was instead of doing the stop loss, I'm going in, I get my big one, I secure the big one, and then when it gets to 50 pips, I just take them. But then I start continuing to get in. So I'm never really out. I'm in at the same position size. So I continue to get in. And then the reason I'm out right now is on the 5-minute chart. I see that great big long wick.
Yeah. That says this could be a bounce
point.
Right.
So I'm out.
Yeah, no, that's good. That's great. And that's where I was like, this is kind of what I'm waiting for. This is what I've been waiting for to fix my trades, but I still don't trust it yet. Right. Even though I've seen that, I want to get back in, but this is like, if you're going to put a buy on, do you trust it yet? Right. And so for me, I would have bought down here in a normal trading situation. I probably would have bought here, probably would have bought there because I counter trend trade. But I'm looking for high probability trade setups. Now, this is trying to push higher, and I think it is going to come up and at least test this. This is the moment that this whole thing breaks down. The run breaks down is when it crosses here, right?
Right.
That's when I would trust it, but as long as I see opportunities to climb from here to here, you can take that too. I just hate getting in as it climbs here 16 pips and you're still on this downtrend. So if you put a buy on, it could come back down and touch that first.
Right. And I took one loss trade just now at 10 pips, I think. And I had 10 on, 9 came off. I was holding the one. And when it got up to 10 pips, I took the loss on that one because it, to me, looks like the turn is coming, but I'm not so certain of the turn yet that I'm willing to buy.
Exactly. And that's why.
And I'm not certain that it'll come back down, so I'm not willing to sell. So I'm sitting.
Yeah, I'm not thinking it's going to come down and run again, but I'm thinking right now it's going to come and touch that and then come back down, because you don't typically see it just a break in one break, right? So this is your test. And so I'm trading the test right here. Now it does break and continue to run. Then you could do exactly. I've seen this, not likely, but I've seen where it's done this move and then immediately does this move. Right. And doesn't typically do that, but I've seen that for sure.
Sam, were I trading your account right now at down 3.5%, I'd be paralyzed.
That's because you don't do it as much as I do it. I've got lots of practice.
I'm curious, honestly.
You know, the magic run button scares me to death.
The what?
The magic Ron button scares me to death.
the 5%, you're done.
Oh, yeah. Right.
Yeah.
Happens like that. But here's my question again. So when it got to 30 or 40 pips of profit, what made you hold on and decide it's going to go for 50, 60?
Because I didn't see it crossing anything. I didn't see anything that told me the trend was going to change on either time frame.
Oh.
Now, I didn't get any.
It crossed a lot of levels.
Yeah, if you look at the one, you get one green bar, one green bar, one green bar, and they were relatively small. And I was willing to sit through that relatively small. And then when I started seeing the 2, that's the reason I got out of the sell, is when I saw the 2 in a row, I said, okay. And, right now, actually, I'm selling again. I shouldn't, because I got to go to the train station.
Yeah, trade.
So what's prompting you to sell at this point?
Because do you see 2 bars over to the left? Do you see the long wick on the top side? So I had not a 3 bar, but a 4 bar, and then it immediately came back down. So I said, I think I can get 2 pips. And right now I'm taking 2 pips profit.
Yeah, you're hunting for 2 pips, right?
Yeah. And again, I'm very light. So if I made a mistake, I'm not going to kill myself.
So for me, I'm kind of doing the same, where I'm just hunting for small gains and getting out, recycling, getting out. But I'm just like, for me, where I'm at, just start looking for any profit I can start putting in the bank.
Yeah. And Dave, if you make the 5 minute bigger, look at that long wick on the 5. No, smaller.
It kind of came up and smacked it down, right? And so that's what I thought it was going to do, like, because again, it has to cross this point in order for you to get that turn.
Right.
But again, I don't. So for me, we have no data, right? We really don't know where the next stoppage point is. So I'm thinking generally speaking, in order for a move to turn, it doesn't necessarily do that in one shot. It doesn't do it in two shots. It usually comes down, finds a place to consolidate before the turn. Right. So I'm hoping, and this is a great place for that to happen. Consolidate. And so that's why I'm put my take profits back on and hunting for small pips as it consolidates. And as long as it consolidates here for a minute, I'll be able to grab some good, make a good dent into my losses. Now, it also gets you nervous because it does cross right here. Guess what? It could run again, right? And so I'd rather have a consolidation. I'd rather have it consolidate smaller price cycles, but in like this area where I'm not touching the tops and I'm not touching the bottoms.
Right.
That's what I'd prefer. Hey, market, I just told you that, so give that to me.
So if you go to the 15 instead of the 5, you can see a pretty big floor. And then if you go to the 30, you can see if it breaks through this floor. Mm-hmm. There's no stopping it.
There's no, yeah, exactly.
Yeah. So, there was a pretty good one on the 15, but if it breaks through, go to the 30. There's just no place.
It's just no place for it to turn. Yeah, that makes it very difficult to trade. Correct. When you have no area where it could possibly turn. Right. Which
is why I made back what I lost, and now I'm really quitting.
Now you're really going. You're not going to pull me back in trade.
Sorry for being so long-winded.
No. This is great. I love engaging when people find success in what they do. It's all about sharing, right? And so everybody that has been on here has learned how Debbie does it. And if that resonates with you, then great. That's the way that you should do it, right? And that's the way you guys try that, practice that, because if it works for her, it might work for you. But that's the thing I love about trading is that there's not just one way to do it. There's a billion ways to do it. If there was one way to do it, then computer would do it, right? So, and everybody views the market differently every day, right?
Tell us one more time what made you hold on for 50 pips instead of just 30? Because I might have just taken 30 and said thanks.
If you look at the 1 minute chart, I was looking for more than one green candle on the way down, and all I was getting was one green candle and not the green candles with any conviction. So I held, and then if you go, get closer in.
No, sorry, I was just looking like there's nothing.
Point where it was blue, 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 green, blue, green. That's where I said, okay, now I'm going to switch from just holding the wave to taking pips. So this is the area where I was in 50. I'm using my mouse and you can't see it.
I've done that so many times.
Wait a minute.
This right here. Can't you see my screen right here?
Can you see it now? I said, share my screen.
No, I got to stop sharing. No. Okay, go ahead and see if you can share now.
Okay. Nope.
In the bottom middle, there's a green button.
Yeah.
There you go. Yeah, we got you now.
Okay, but then you went away. So let me.
Well, we are seeing a screen share of Mountain. So that's what we're seeing. We're seeing your Mac.
Right, and I'm trying to get it to be big again. This is weird. Okay, so I lost you guys.
Mm-hmm.
See if I can go back here. Okay. Not going to work.
When you go to share the screen, it should ask you which window you want to share.
Yep, and it didn't.
Nope. Try again.
Okay, let me try again. Yeah, see it. I don't have anything to share. So it went away. I had it up for you, but.
And this is a definition of a marching market. So I'm glad that some people, it's still going. I'm just glad that some people were able to take advantage of it. Anybody else?
You should have held on for 80 pips.
Anybody else that's just like killing it right now? Debbie, this is you're the only person. That's awesome. And you just see the world differently.
Yeah. So it was just that one doji that triggered you in short.
Nice helicopter head. He's up 300 pips, 1.6%. It's like, I don't trust it yet. And so for me, I don't think I'm going to be trading this until the market turns for me. Like, that's just me.
See a bottom, but I see the risk as being really big right now. I have to, my next stop is on the 30 and it's very close. And after that, I don't see a bottom, but the risk of it popping back up and doing exactly on the upside what it did on the downside is too big for me to trade right now.
Right.
Even taking sips of 2 pips is just too big.
It is a risk to buy and sell right now.
Right.
And so unless you're in a ride the wave situation where you're holding on to something, it just never has given me a signal to jump in, right? For me. And so if a lot of people are doing that, this is like the challenge today is to sit on your hands, not trade.
Right. And if you look at the 30-minute chart, there are 2 candles of unusual size. Both candles went more than 2 price cycles on the 30. So it could continue, but it's too scary for me.
Candles of unusual sizes, they don't exist.
Oh, okay. Look at the 30.
No. I always think of the Princess Bride quote. I'm like, ROUSSs? They don't exist. Candles of unusual sizes?
Okay, I really do.
Yeah, I think we'll call it there too. The Hobble Wobble says, will you try to fix this today? Absolutely, I'm going to fix this. I just don't know when or where, but I'm going to wait until the market turns. So everybody in Discord, if you guys are trading, like, and you see the market turn, call it out in Discord. Say, hey, the market's turning or whatever. And so, because I may not be watching every time, but if anybody sees it, call it out, and then I'll jump on and try and fix, because it is just like, it's not good to trade this market in any direction right this second.
And the other thing is Powell is talking at 1:30 East Coast time.
Yeah, and that could cause some good movement, but this market has definitely ignored price cycles from the moment that we started. And that was, for me, just a quick recap, is we got in right here. I was thinking, this is where I was thinking was.
Will you share your screen? All I got is your face.
Well, it's not enough, Debbie. Absolutely. All right. So, where I got in today, drawing charts, we're looking at it and we made the assessment. Okay, look, we got price cycle up, price cycle down, price cycle up, price cycle down. So I'm thinking, okay, I'm just going to price cycle up. So I started getting into some sells here, waiting for the next price cycle down, right? Because that's the market that was previous to our trading. So I said, okay, we should get a price cycle down. And we didn't. And then it ignored price here. It ignored price here. And it went all the way up to the top, right? And then it kind of held true to price. So I'm like, okay, so we got this 3 price cycle run, which I withstood. And I'm like, okay, as long as we can get it back here. And then it consolidated right here. And then this happened, right? Which that's when I had to get out of my trades. And then I'm in fix-it mode the whole time, hunting for high probability trade setups. And because of this move, and then it bounced back up. Instead of trying to come back and correct that move, it moved against me again. And so this is where I was down, to almost 3% right here. So now I'm hunting for high probability trade setups, comes all the way back down, touches, thinking it's going to come back up. And then it just shot down right here. I think I was into some sells right here. And then on this move, I got out, looked to buy back in for a test of this right here, because this is one of my high probability trade setups that I look for often. And it did happen. The move happened, but it was really, really quick. And this is where having a take profit on would give you that advantage, because it was a wick. It happened on a wick where to me, this is a high probability trade setup. I went in heavy right here for a pullback to the test of this. It happened, it wicked. I didn't have a take profit. And so it didn't give me another opportunity to get out and hit that X. And so I ended up taking a loss on that because it immediately went there. Right. And so I took that and I had to get out quickly, which just worsened my position. But then this happened, right? Where it just ignored price behavior, price structure, everything started to being ignored. And as soon as I see that happen, it's hard. It is probably one of the most difficult things to trade right here, because you do not know where it's going to turn. You don't, if you get into a sell, you're chasing the market and you have nothing over here to tell you where's our next point of turns, right? And so you could play the Sean method if you have the position size and just keep building in, get this one move, get out everything. And I just didn't have enough bullets in the tank to do that. I guess I could have reduced my position size, but for me, sitting on my hands was the best play and waiting, because this market is the most difficult thing to trade. But I think the key here is recognizing that, right? Is recognizing that you're in this market. And if you're not in favor of it, don't trade it, right? I see a lot of you guys out there that tried to counter it and getting into buys, and it just kills you. And so the best thing to do is just sit on your hands, get out, sit on your hands, come back and try to fix it in a market that you're familiar with, right? The moment you get into an unfamiliar market and you try to trade it just probably the best advice today is just don't, right? Don't trade an unfamiliar market unless you happen to catch it like Debbie. But a lot of us didn't today. Debbie's the big winner, right?
And when you're trying to fix your
I let my
trade,
dog out real quick.
put take profit in and just start at least until you get some leeway. You've got 1% right now leeway. So if you take sips until you get to like 2% leeway and then start holding, or are you actually going to try and look for some things that make more than 2 pips? Does that make any sense?
David didn't hear you.
No, I didn't. Sorry, Debbie. I had to let my dog out. He was begging.
When you're trying to recoup, are you going to go in and you've only got 1% leeway right now? Are you going to try and take 2 to 3 pips each time until you get 2% and then go back to a normal trading range?
Yeah, that's what I typically do. So when I still have zero take profit just because that's me. Because if I does decide to break, I'd like to allow myself the opportunity. But yes, I am still looking for those short little wins, the 2 pips, taking 2 pips and chip away. And if I get a breakout on the right side of a breakout, like if I'm, like I was hoping right here would have been that consolidation range where I chip away, and then I get that. That's usually where I fix a lot of my trades. is something like that. Do you know what I mean?
Yeah.
That's what a zero take profit allows me to do. And that's what I'm looking for right now. And I'm hunting for a possible consolidation because, I mean, I think it's not hard to know that you're going to get a response to this move, right? At some point, you're going to get a response to this move. And I'm not saying that it's going to be 100% retracement, but even if it gets a 50%, that's a pretty good move, right? So even if it comes out 50%, that's 40 pips. 40 pips would more than fix all of my trades as long as 40 pips happens like this. Do you know what I mean?
Right.
But it happens something like that, I can fix all of my trades, but I can't until that move happens. You know, I mean, the other thing you guys could have done, but nobody can see this. Nobody can predict this straight down move of 100 pips, right? No, if you look back in the market, it just doesn't happen. I mean, on the 15-minute, it happened here for 70, but it just doesn't. These type of moves don't happen very often, right? And so it's very, very difficult to trade when moves don't happen very often. Let me just see if we have a couple of questions before we call it here. Let's see. How do you know the difference between layers and a march? Because standard wobbling is adding, and if the support doesn't hold, add to the next layer. So the marching market, really, you don't get price cycles, right? And so it ignores action points right here. And even though it tries to move up, you would say, okay, here's a price cycle of 13. So it should run up 13. It didn't run back up the other way. So that's when you get into a marching market. And again, you're going to see a lot of this, you're going to see a lot of these moves, but you're going to see a lot more marching markets, as somebody just mentioned, during the holidays, right? So you get closer to Christmas, these moves tend to happen more often than not. It's almost like going back to summertime trading. If you're going to trade closer to the holidays, you get kind of this kind of stuff, right? So you kind of have to go back to the summertime strategies that we had with adding belay layers on, all that kind of stuff. And if we get more of these margin markets, which we had once last week, we have one this week, but if you start getting them like 2 to 3 times a week in our trading sessions, then I'm definitely going to be throwing belay layers on. And this would have been a great place to do that right here. Is on this bounce up. If you would have gotten to a safety layer in case it does bounce and run, this is where you would put that belay layer on. And I haven't really done that because typically we get the bounce, right? You see the bounce come in right here. And so I haven't really been putting belay layers on lately, but I probably will start doing that as we get closer to the holidays. And I definitely did that almost 100% of the time in the summertime. Kept adding those on. Let's see. Another question. Any other questions? I don't think so. Unless I'm missing, repost it if you guys. But thank you, Debbie, for sharing with us today. I appreciate it. I'm sure everybody saw extreme value in that for sure. So, if you guys have a question, any last questions, do that. If not, we'll go ahead and call it. And then, like I said, guys are going to trade this, watch the market, call it out if you guys see it. If you guys see the turn, get the turn. I'll post my results after I fix it, see it when, and show you guys how I fixed it when I fixed it. But I have no idea when that's going to be, and I don't want to turn this into a marathon trading day today. So,
hey, Dave, I have one small comment.
Yeah.
If you look at the hour chart over the last 3 days, you'll see a channel line where all the lows And it right now, it's just approaching that channel line on the lows. So I'm expecting over the next hour a bounce.
Yeah. The only thing that I would be cautious about is that we do have Powell speaking, right? And so if you have,
of course.
if you have a news event, coming in, you just got to
cancels everything.
Yeah, it kind of cancels everything, but it could be a catalyst to fight against this move down, right?
Yeah, good deal.
So that's what I'd be looking at is or it's either going to be a catalyst to change this to fight that move, or it'll be a continuation of a move depending on what's said. Does that make sense?
It'll break the line. Yep.
Yeah, exactly. So I wouldn't put a lot of stock and faith into price action today. Does that make sense?
Yeah.
That's the only thing that I would probably say to that, and just kind of wait and see. So, but no, good stuff, guys. It's never easy taking a loss and not being able to dig out of it. But if there's anything that you can learn and take away, is that this could have been a lot worse, right? Especially if you guys are trading where you don't have the 5% shut off. This could have been a lot worse. This right here is account destroyers. If you're trading your own money, your own live account, this could be these moves right here are what blow accounts up. And so I don't think, I know I wouldn't have traded it any other way, whether this was my own live account or Alveo. I don't really look at, for me, I don't really look at the 5% as that doesn't influence my decision on how I trade, right? So, and I've had to learn that from a psychological point of view is like, hey, if there's opportunities, I'll still take the opportunities, right? And still trade. But now I do, and I just chip away. And so if there's anything that take away from this is the market that is not conducive to my trading style. And when you get into those situations, don't make it worse by trying to trade a market that is just not familiar, that you're not familiar with. So maybe that's the biggest takeaway. Anyways, other than that, guys, I'll post as soon as I fix these trades. We'll get back to there. So appreciate it, guys. And we'll go from there. Thanks.
Thanks, Dave.
Thank you. Bye-bye. Thanks.
All right, guys, I want to do a quick recap of, again, you see that at the end of the session, I was down quite a bit, but the key point or the key element of the session was to sit on your hands because the market structure was not conducive to the style of trading which I like, nor was it conducive to how I teach. And so by recognizing that, I noticed that I needed to not trade, or what we call sitting on our hands. And so I did wait. Thankfully, the opportunity to start fixing my trades came really soon, right after this big downside. Now, let me share my screen here for a second. At the very beginning of my trades, we kind of got into this little price cycle, right? We got 9 up, 12 down, 15 down. And I was thinking, okay, it's going to go 9 up, maybe 15 up, and then kind of price cycle back down. So I'm thinking, all right, hey, perfect opportunity for me to pick up some trades here on the price cycle ups, price cycle downs. So I'm like, hey, end of the price cycle, it's going to go down. So I got into some sells, and guess what? It did not go down, right? It did not go down. I'm like, okay, here's the turn. Now I'm going to get into some sells. The action point told me to get out. I should have gotten out of everything here. I didn't read that correctly, as I thought it might come back down into another price cycle down. It didn't. As soon as this pop happened, I knew that that was a bigger loss on these trades that I wanted to take. So I just got out of everything. And now getting out of everything, now this just put me into fix it mode, or fix it. Now I got to fix all these trades that ran against me, 25, 30 pips against me. So now I'm in fix it mode. This is what I'm looking at right here. Just trying to pick up some high probability trade setups where, hey, maybe it's going to continue to run. So I put a couple trades on here, not too heavy, really light, just in case it does continue to run, right? Pull back, continue. It didn't. So it popped down here, bought in. This is where the market structure changed on me, right? And you had to recognize it that, hey, right here is a bounce point. Right here's a bounce point. It ignored it, went right past it. But it was also an M, like you saw, I called it out as a chart pattern, that if it did run down, it probably could come down to here. So I was kind of into sells looking for that, thinking, okay, it's a bounce point here. Maybe it'll bounce back up into here and touch that. It didn't, right? So it came down, it's lost on that layer, sold, and I'm like, okay, I've just lost on 2 layers, and I'm really kind of getting not necessarily gun shy, but looking for just high value targets, right? High value targets that I can take down really quick. So again, here was another bounce point. And I think once it ignored this bounce point and continued, I knew at that point was confirmation that we are now into a marching market. And I kind of just sat on my hands the entire time. I was waiting for confirmation of the turn. And then when that confirmation happened, I was going to start. This is where I thought that confirmation of the turn should happen. It came up, it failed. So I got into some sells thinking maybe, and then again, got into some buys here thinking, okay, is it going to come back up, retest and turn? And the answer was no. And I quickly got out of these guys as soon as it crossed over, because I knew at that point we were still in this big old marching market. And again, sitting on my hands, waiting for the turn, right? So if you look over here on the 5-minute, I was waiting for this. Now I'm waiting for this to happen, which is a confirmation of the turn, which is a 5-minute 3-bar reversal right here, confirmation of the turn, right? So that's what I was looking for on the 5. As soon as that happened, I started to stack into some trades. You see here, this is where I'm starting to buy in. So this is all gone now. We're looking at this. This is where I'm looking at. Now I'm at this point, I'm like 3% down on the day, right? So I'm like, okay, I got to get into some high value target. I got to get into some high value trades, and I got to get in and just start taking small wins. You see here, this was like a 6-pip win, but it came back and tested this action point. I was hoping it would stay above it and keep running. It didn't. So I took it there for a 6-pip win. And you can see here again, I'm like, okay, it came back down. I'm going to take it for a ride up to this point, and just getting these little 5-6 pip wins. Now, the key here is, although I'm down 3% at this point, I'm not looking to get it all back in one swing. I'm not looking for home run trades. I'm not looking for anything but just quick hits, quick opportunities, start to peel back some of your trades. And I think it was on this last high probability trade setup, and I'm going to identify this as a high probability trade setup right here, because it kind of had that apex, came down, failed to cross this point, or really this point right here in the market. So I knew we were going to get a bounce back to test this high. And I wasn't looking for the test of the high. I was only looking for 2 to 3 pips, which was right here. And I stacked in a ton of trades looking for a 3-pip gain or a 2-pip gain. Not this whole ride. I was looking for just a partial of that ride, move up. And right here is when I made back at least 1%. So now I made back 1%. I'm a little bit less than 2% down on the day right in here. And I'm looking now. I got, okay, now I can add a little bit more. I can get a little bit more aggressive, if you will, on high value trade targets, because I pulled back some of those losses or regained back, took back some of the power that the market has taken from me. So I ended up getting into some more buys right here. Once it did kind of cross over here, I felt like at this point, the high value target was, if it crosses over this, it's most likely going to come up and touch this, right? Or test this area. And I don't want to have it go 100%. I do not want to have it go 100%. So I'm just going to pick up, again, short little gains, short little profits, of whatever I can get, and then recycle my trades. So that's what I'm doing right here. I'm recycling my trades. In fact, off of this, this is a really, 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 really good high probability trade setup right here that I wanted to showcase. Right here, you see how I was into buys and then I was into sells, and then I'm recycling my trades, but I'm taking them. So I'm buying, and I didn't peel my buys off until here, but I saw an opportunity to make some money, a short-term money right here on some sells. So I did that, and then I went back in again with some buys, and then when this action point right here stalled out, I got out of my buys, got into some sells just for a test of this candle, right? Just to come down and test this candle, not to break to the other side, just a short little profit. And I took a bunch of those because it was a short little profit, and I was only hunting for 2, 3, and it gave me 4, right? But I was only hunting for this, for just to come down to test this. And this is a high probability setup where it breaks out and then comes back and touches this for 2 to 3 pip gain, and I will smack a ton of trades on there, as many as I can before that opportunity is no longer an opportunity, right? So once it failed to cross down to here, I'm still playing. Remember, I'm still thinking that it's going to come up and test this right here. So I'm still thinking it's going to test that, and it comes down, and again, another hit for another smack into as many buys as I can, just for not a breakout, but just for a quick hit of 3 pips for a 50%. So I was looking for 50% move back of this candle. So again, 2 quick high probability trades inside of one candle on the 1 minute chart. I love that. I'll take that all day long. I'll get aggressive on that. I'll put as many trades as I can, because I'm not looking for it to break out at anywhere. I'm just looking for quick hits, 50% of that candle, boom, got it there, got it here, all that kind of stuff. And now I'm sitting here thinking, okay, I'm almost back to break even. If not, yeah, I was up a little bit, like 0.5%. I showed that in Discord, what was going on there. And then it comes down. Then I'm done, right? I'm done trading, but then I'm thinking, okay, you know what? We're going to have a news event coming in here pretty soon. I'm going to see if I can't take advantage of the news. And so I'll put a few trades on with Pal speaking today, and I'll put a few trades on. I'm also, thinking it's going to come up and test this. So I think this was a mistake right here where, I put a buy on thinking, okay, we're going to come up and test this right here, and it didn't work out. I had a really, really quick stop loss, a tight stop loss on this, because I didn't want it to run against me. So I tightened up my stop loss, and I put my stop loss obviously right there, right? Thinking that if it does come down and I got to walk away, and this is when I was on a phone call, so I had to walk away, and I'm like, if it crosses this, I do want to get out in case it does decide to do that. So I came back in and I saw, so I got out of these trades, got in, and I'm like, okay, I want to get into, take some quick profit here, back up to here, take some quick profit, but I also want to get some layers on that I can just sit and hold through and see what happens with the news event, right? So I put a few layers on right here for that hold, and then it went down. So I added a few more layers on for that right here. And then I got into some fix-it layers right here, or trade adjustment layers right in here to fix the trades that I had on right here to fix this loss, right, that I took. So right here, as you can see, coming in, I'm just kind of buying as it goes down, I'm buying, but I'm taking some profit and leaving some on for a run, taking profit on others, leaving some on for a run. And then I left these trades on for the run higher. You don't expect you're going to get a 27 pip run, but I did expect we were going to get a pop to the higher side, and that pop to the higher side just basically gave me, this is the reason why I don't trade with take profits. Sometimes I do when I'm fixing my trades. And if I'm looking for quick hits, I will. But when I'm normal trading after I've recovered, now I'm looking for, big pops, big gains, all that kind of stuff. And I just got out here on, the first pullback kind of pushed up. I got out and said, okay, I'm done. I'm good at a 5% return. So on the day, I went from a negative 3% to a positive 5%. So an 8% swing on the day. I wanted to share that with you guys because although it didn't happen during our trading room, I wanted to share that with you guys on having the ability to understand market structure, when to sit on your hands, when to go heavy, finding high probability trade targets. And then, obviously it's doing this right now. So hopefully that helps you with you guys. Hopefully that helps some of you guys out. And hopefully you guys were on the right side of this move that just happened. So again, look forward to trading with you guys in the morning. I know that these sessions have really helped me. Hopefully they've helped you. Don't forget to like, subscribe, and all that crazy stuff. Appreciate you, and we'll see you in the morning.